welcome guys to a new video, and in this video we will talk how to trade like the big banks or mimic what they are doing with supply and demand. Okay, so if you will like this video, leave a like, subscribe, and also leave a comment and let us know what you liked about this video, so we know what we can keep doing and what you guys are enjoying. Okay, so to do this, okay, to basically trade like them, we have to unlearn everything that we have learned. Okay, and I will show that in a bit, how we have to unlearn that, but this is basically what we have to do. We have to unlearn the common knowledge, okay, that we basically get passed by other traders online, other people that we get to know in our journeys, in our trading journeys. Okay, but this is basically just not backed knowledge. Okay, it's just what gets passed around from one trader to another one, and really no one questions it. So that's why some mostly don't know what to do. It's just like anything else. Okay, we have to buy low, or in this case, since we are using supply and demand, we have to buy at where is demand, okay, or sell high, which means it's at supply. So one thing that I was talking with one of my friends that are also traders, I was talking like, why don't people apply common knowledge that they usually do in their normal lives in trading? Why should it be different? And I was talking about Gucci. Okay, so let's say you like a Gucci belt, and the Gucci belt is at $1,000, and you see the same belt at $500. Why wouldn't you buy that? Okay, and if you have a Gucci belt for 500 and the price goes up again for 1,000, 1,500, then maybe you want to sell your Gucci belt. And this is exactly what you have to do in trading. When it's low, and when it's maybe low for the big players, active players, this is why we want to use tools to know, or to get us a feeling or a potential probability where it could be low for them, for us to get in on low prices as well. Okay, so this is all what we want to do. We want to buy low, or when other big players consider it low, and try to sell high when other traders or other big players consider the price high. Okay, so I will show that now in a little example now, based on supply and demand. Okay, keep in mind this is a supply example. So on the demand, you just have to switch it up. Okay, it's just basically the same thing. So what we see here, okay, on our right, is basically a zone that was created, a nice range. Okay, so price have, just imagine it has broken market structure to the downside on this case, and we see price trending back up into this level. Okay, this is a simple example, and this is what we want to use. Okay, price has trended up on our lower time frame. Maybe this is at our analysis time frame, is trending up for a while. And what retails people do is they say, okay, it went up for so long, so let's keep buying it. Okay, if the market is eventually showing, okay, we want to sell. Okay, these are high prices, we could be going lower for pullback, or going lower for potential reversal, but we can capitalize on both. Okay, so if the price is going higher and higher and higher, we are thinking prices are getting more and more expensive. And when prices are going lower and lower and lower, of course we can do continuation trades and all that stuff, but we're thinking that price is getting cheaper. We may want to buy soon. This is very, very important. So let's say this was a nice trend, days, weeks, depends, and price is at a point where it originally have sold off a lot. So what we do is we look for entry signals, and let's say we enter here. Okay, so let's say we have a clean stop here, and we target this previous level here. Okay, so this would be a nice trade if the price goes in our favor. Okay, and then basically we hit this level here. This is where I want to take emphasis and talk about. Okay, so this is a pretty high level. Okay, but if this would be the live conditions of the market, we have an impulsive leg to the upside. Okay, and maybe you have many minor zones along the way, many little zones, and you don't want to trade every little 1 minute zone, every little 15 minute, 5 minute, whatever you use. Okay, you don't want to do that. What you want to look at is maybe look at a bit higher time frame, look how the impulsive move was created, maybe draw an Fibonacci on it and see where price may retrace to. Okay, and if you have these areas around there, even better. Okay, so this, let's say this would be a nice retracement level, okay, of the whole impulsive move. We can use that as targets. Okay, and instead of selling lower and selling lower when it's already run a bit, we are thinking maybe we can continue this move up. Okay, but we had already a nice short when everyone was trying to buy even more because, okay, it ran up for so long. Okay, we keep it as expensive, we treat it as expensive, we think it's expensive, so if it's expensive, we want to sell, okay, not buy. And when it retraces a bit, then we can start thinking about buying. And if this is a nice retracement level, like I said, you don't want to be buying on every insignificant level. If this is a nice retracement, you could buy. Okay, and let's say it doesn't work, no problem. Okay, you can look for other retracement levels. And along the way, you can create even new levels. And this is where you can draw your continuation zones, okay, from the current impulsive move, which can be used for targets if you're buying on a deep retracement, or can use as well for initiation of new trades. So I hope this video helps you guys to understand how to think about price, and we see you guys in the next videos.